All right, welcome back to Two Stupid Gas Trade Stocks. I'm Vinny,
Dylan?
and today we're going to talk about much requested one. People have talked about Tesla for a while. I'll be honest, I was kind of like put off by the PE, so I never really like kind of took a more in-depth look at it and ran some projections of my own to kind of see where I think the stock could go. Now that's what we're going to take a look at today.
All right. If you like this kind of entertaining stock market content, we're just two stupid guys trying to figure everything out, give us a like and subscribe.
Right, with that, we'll get to it.
Two stupid guys trade stocks.
See, look at the excitement of Big Daddy Musk here in the corner. He's just excited for Tesla's future, the future of the world.
Oh no, he's killing it lately. And just to be clear, if anyone's like, "Oh, these guys hate Tesla," I love Elon Musk. There's a difference.
Yeah,
I think Elon Musk is awesome.
Yeah, very interesting. Definitely, $300 billion man, which is awesomely impressive. He looks like a kid on Christmas morning here, which is definitely a great look. Very enthusiastic. This picture in the background, actually, I'm not sure if you've seen this. This is pretty new. So Tesla's opening a gigafactory in Texas, and this is the kind of their fine tuning of the assembly line. That's what this picture is from. It was in their most recent quarterly report.
Nice. Okay. Yeah.
So this is also for the most recent quarterly report, kind of a little highlights and important facts and figures about Tesla. They are generating positive free cash flow, which is something as like a value oriented kind of guy I love to see, right? 1.3 billion in the most recent quarter, very impressive. They paid off a little bit of debt, so they actually paid off a little bit more debt than they actually had in free cash flow. So they dipped into their cash reserves a little bit. They are profitable and profitable without those credits that they were people were talking about a couple of years ago about how these regulatory credits were the only reason why Tesla was profitable, but they are profitable on their own at this point, which is kudos to them.
Do we know how profitable?
So, $2 billion in GAAP earnings for the most recent quarter. 30% GAAP margins, 28.8% without the regulatory credits.
Oh,
right.
Okay.
Yeah, right there. In terms of other kind of facts and figures, so I'm not sure if you've kind of heard this, or I know you I don't know how much you follow it, but their kind of average selling price, so what the average vehicle that they sell for, has been decreasing year over year. Were you aware of that?
Well, I know that, like, for instance, when they announced the Model 3, they're like, it's going to be like $35,000. That was a lie. It's like,
No.
you can't find that model anywhere. It's like 55.
Yeah, exactly. Yeah. So right now, the average selling price for a Tesla vehicle is around $50,000. That's across their whole kind of lineup. As they introduce new models, they're bringing the kind of stack like lower and lower cost, and they're obviously selling more and more because there's more demand at the lower end of the market. Elon Musk has talked about this $25,000 Tesla that he wants to eventually introduce, but he not yet. It hasn't officially been announced, kind of sort of thing. But the Model 3 is kind of like that, and Model Y are their new front runners. Model Y is the one you're going to see rolling out a lot more over the next few years.
Their 25K Tesla is going to be 45 after all the costs.
But the cool thing, though, is that even though the fact that the average sell price has decreased about 6% year over year, because of cost controls and increased efficiencies throughout their manufacturing, they're actually been able to increase the gross profit margin. So vehicle costs coming down, but they're actually making more.
So the opposite of Peloton. That's pretty
good. Yeah, exactly. This was actually from their 2020 annual report. This graph would look much more skewed if we had it now. But it was very interesting and kind of telling that Tesla is kind of tracking somewhere close to the NASDAQ rate of return, basically up until you get to basically the pandemic like era.
Yeah, they
oh geez. And like I said, this would be far more parabolic because they did a stock split here after this.
They did a split down to, was it 300? 400?
I don't recall where it landed after the split, but
because now they're back at 1250 or whatever, or 1220.
Exactly. So, but like I said, this was definitely interesting. Like I said, from their annual report. This is a little financial summary here. Looking at quarter over quarter sales. Now, people will tell you that Tesla's not an automotive company; they're a technology company. Tesla themselves, if you read the annual report, I don't know if you've read much annual reports, basically, but the first section of the annual report is like, who are we and what do we do? And basically, Tesla opens with, we are an automotive manufacturer.
I think the confusion is because Elon himself has like 5 other businesses, and people roll in Elon's like SpaceX, the Boring come all into Tesla, and it's not the same thing.
I know. I've seen comments to that, and like it makes me cringe a little bit that people don't fully understand what they're invested in. But and I will tell you that as you're going to go through this, you're going to see that although Tesla is an automotive manufacturer, they are above breed in many ways compared to some of the other auto manufacturers.
Oh, I'm sure.
Yeah. But you're looking at $12 billion in automotive manufacturing, we call it revenue in the most recent quarter. Total revenue is just over 13.7. Honestly, the solar business and Tesla Powerwalls, tremendous growth, but not really adding any free cash flow or like that. The vast majority of the business, the valuation is just based upon the automotive revenue, because that is by far and away the driver behind the business. I guess is a good pun right there.
Yeah, those Tesla walls they're cool. They're really expensive.
I know. I kind of want to get one. Not yet, but the other thing too is you have to think about the fact that Ford is saying that their Lightning pickup truck is going to be able to use kind of use backup power to your house. Like, to me, that eliminates a certain kind of desire for the Tesla Powerwall, because that's why I wanted it.
For backup power to your house.
Exactly. Yep. I lost power like last week for like 12 hours.
I
forgot. Throw out everything in my
Yeah.
So
I'm in the city. That doesn't happen to me.
No, it definitely happens to me. So looking at this automotive gross margin, 30%, pretty solid, right? You and I have talked a little bit about gross margin. Like, what do you think about like a 30% gross margin on a company that actually sells physical products?
Yeah, I mean, that's actually fairly surprising. Even for a car company in general, actually, because I feel like they have fairly low margins. Doesn't Ford have a fairly low margin?
Yeah, you're going to see it here in a minute. Actually, I put it in here.
Oh, good. Okay.
But we're going to compare it a little bit to some like tech companies, and also to some legacy auto manufacturers, and kind of see where Tesla lies in that.
Right. I mean, I think at like 50 plus, you're looking at software companies pretty much exclusively, right?
Exactly.
I'm sure there's a weird one here and there.
Yeah, very true. Tremendous growth in terms of vehicle production here. They've done a good job in terms of turning cash flow positive here and maintaining that and continuing to grow that. Really respectable. They definitely, people that were invested here in 2019, 2020, they definitely foresaw, Tesla kind of turning that corner and becoming a reliable, growing company. And I respect that. And certainly, like, a play that was involved risk, but these people appear to be correct.
Oh yeah, no, I mean, the bank account doesn't lie, right?
Yeah. Well, the question is for us, and what we're looking at right now, is it a reasonable investment still at this point in time going forward? And we're going to make some assumptions about the future and that sort of stuff.
Oh, it's gonna be tough.
Yeah. So this is from their balance sheet. $16 billion in current what do you call it? Current assets here. Total current assets actually $25 billion, and they have total liabilities here of $29 billion. All right. So we're going to looking at their, like, a little bit of their leverage ratio. How levered are they compared to other companies out there in the marketplace? All right. So, basically the higher the number is better. That means you have way more assets than you have liabilities. It means your company is safer. You're not as worried about, potential economic downturn resulting in bankruptcy or disruption to your business in other ways. So Tesla hanging out 0.89 current ratio, Toyota 1.06, Ford 1.2. Now I threw in a couple of like traditional tech companies, both Google and Microsoft. 1.79 for Google and 2.08 for Microsoft. So, like, what do you think this kind of leads us to? Is which group of these companies does Tesla fall better in line with?
I'm surprised Toyota or Ford's higher than Toyota. I did not expect that.
Yeah, I mean, it just means that they're not particularly quite as levered at this particular point in time.
Yeah,
somewhere in the same ballpark, right around 1.
Yeah. Okay.
Don't get me wrong, doesn't make me nervous. Like, they're fine at this kind of ratio here, but it's kind of giving a little bit of a picture about where their valuation belongs closer tied to. That's my thought.
Yeah, for sure.
So gross margin, we talked a little bit about this. So I did a trailing 12 months
Oh.
because most recent quarter Tesla was doing pretty well, but I wanted to kind of look at a full year of guidance here. So Tesla 23%, Toyota 19.4, Ford 14.3, and then the two tech companies here again, Google and Microsoft, 56.5 and 68.9.
Right. Yeah.
First of all, damn Microsoft.
Yeah, that's ridiculously high.
Yeah. They're 0.1% from the perfect value. Even Elon Musk would agree with that, okay?
Okay, Gronkowski.
But for a company that's kind of new in terms of like a newer auto manufacturer, I know they've been in existence since 2010, I know, but like compared to Toyota and Ford, that is still like barely scratching the surface as far as age. They are doing well in terms of their gross margin. They're getting good value for their production. Right?
And you would think that would probably go higher in the next couple of years.
Yes, yeah. In all likelihood, it is. Now, this is Elon Musk's kind of prediction here. I'm gonna mention a little something about it in a second, kind of about how realistic I think this is. But Tesla is saying that they think they can achieve 50% compound annual growth rate, or in vehicle deliveries over the next several years. You think 50% growth?
Okay.
Okay. So to give you an idea, they produced about 800,000 vehicles in the last 12 months, trailing 12 months.
Okay.
Now, going forward, I used about a 30% gross margin, which is roughly in line with where they are right now, kind of including the regulatory credits, meaning I expect a little bit of expansion, even though as those regulatory credits kind of, wear off, that they're going to get a little bit of expansion in their gross margin. The operating margin I kept pretty close to flat. Tesla, I don't see having the eye on kind of cost control. That they're certainly going to be trying to innovate and spending a lot of money on R&D, which I understand over long term can certainly have some or should have some for kind of rewards for shareholders there. But in about 5 years' time, I doubt much of that will have come to fruition. All right.
I don't know. He let out those AI robots that can go grocery shopping for you. That's part of it, right?
Yeah. No. I'm not including that in the valuation whatsoever. If I say a single one of those things in the wild before the 2030, I'm like willing to eat this roll of tape. Okay?
All right, we have it on video. That's perfect.
Yeah, that's not going to happen. The same thing too. Like he's talked about licensing the full self-driving software to other auto manufacturers. Like, can you think of an instance in which an auto manufacturer would license this technology from another company?
They probably would just use their own, right?
Yeah, I mean, they're it's much. I cannot see them being willing to hand over that data. Like Ford is not going to hand over that data. They're not going to compromise with Tesla on putting the cameras in that Tesla requires, having the control input from the full self-driving computer system into their vehicle controls. They're not going to hand over that level of control to an outside company. It's not going to happen.
Yeah.
Yeah.
I didn't really think about that actually.
Yeah, and if you watch a lot of like bull case analysis videos of Tesla on YouTube here, you're going to see a lot of folks including that, and like I don't see that happening. Same thing with robo taxis. Maybe by like 2026 we might start to see some, and they're going to be not entirely independent. I think they're going to require a driver actually sitting in the driver's seat supervising the robo taxi at that point in time.
I think there's a chance that you could have without a human because they've been working on that for a long time.
By 2026, you think 5 years there'll be no human sitting in the driver's seat?
I'll go 2030.
Realistically, by then, yeah, because even in Tesla, in their own annual report, they talk a little bit about how regulatory environments is very confusing for this. There's no rule specifically against it at this point. However, they like I think it's the National Highway Transportation Safety Board has like reserved the right to kind of continually evaluate it along the way, and others in certain states have actually even put in their own rules regarding like autonomous driving vehicles. So it's going to become a regulatory nightmare as this technology progresses in terms of which states it can be deployed in. It's going to be kind of like, your Fubo sports book and which states they can operate in and at what point in time. And so
they're gonna start selling cars. Don't their horizon is they can do whatever they want.
Maybe.
Don't get me started on Fubo. I'm terrified for earnings.
I know, right? So I also modeled in a 3% decrease in average selling price. Eventually Tesla is definitely, kind of shown that they're moving down market in their pricing, which I commend them for making it more available to the mass market. Okay. So that means that in 2026, they will sell about 6 million vehicles, a simple 6x approximately, a little bit from here. Average selling price, 3% annual compound kind of rate will bring that down from 49,000, which it is currently, down to about $43,000, giving them automotive revenue in total $263 billion. Okay. Just to give you some context, that the current largest auto manufacturer in the world is Volkswagen with $254 billion in revenue. So the prediction here from Tesla themselves with this 50% growth rate is that they will be, if not the larger than the current largest automotive manufacturer in about 5 years' time.
No.
Okay.
I'm gonna go no.
I
don't like the average selling price at 42,000 because with inflation alone, that's like good, like 37 now.
Okay. I mean, the base model of the Cybertruck is supposed to be like $39,000. I want to say something like that.
Yeah, it'll sell. The smallest one will be 55.
Yeah. And I was generous. I gave them a 20% net margin, so that they're gonna expand that net margin that they have right now, about 14.6%, I think it was, up to 20%. Right, giving them about $52 billion in profits. Right. Now, this is one thing you do have to account for. Tesla uses shares to finance and fund their operations. That's why their current ratio was pretty good. But that's the continually issuing shares. Elon Musk's $300 billion man has become rich largely on the back of shareholders in terms of share dilution. Yeah.
Okay.
All right. So I modeled this forward. I looked at 1.192 billion shares outstanding in the year 2026. I gave them a PE of 35. PE of 35 is rich to my blood. For the last 40 years or so, the S&P 500 has roughly traded around a PE of 20. But, I will give them the PE of 35 includes credit for Elon Musk being like, a visionary kind of forward thinker, for, Tesla's kind of continual innovation in terms of product research and development. That's what I'm baking into that PE of 35. It's rich,
Okay.
but I think they could justify it in some way. All right. Now that gives them a $1.8 trillion market cap in the year 2026. Respectable as hell, right?
I think it's a lot.
Yeah, I'm being generous here, okay? But when you look at the share dilution compared to that market cap, you're looking at about a $1,500 share price. Right? What is the current share price of Tesla?
1222.
Yeah. Okay. Oh, did you see it there, or did you just kind of know?
No, I have it up. I'm looking at it. I typed it in when you were doing that because I'm like, this seems high.
Yeah. So if Tesla does what I am basically, I'm giving them credit for a lot of things, but I'm not giving them credit in other areas. But if they do somewhere, this is kind of a middle of the road in terms of analysis, we're still looking at about a 4%, 4.8% per year compound annual growth over the next 5 years. What do you think about earning 5% on something that requires 50% growth per year to hit that number?
I don't like it. Also, their forward PE now is 155.
Yeah, I know. I'm definitely
you're being real generous on this number.
And it's still a stretch.
It still does not look awesome.
To give you an idea, I was doing the math the other day, right? So 4.8%. People have told me, Intel's dead as hell, and like, yeah, okay, fine. Just in dividends,
I've told you that.
I know a lot of people do. Just in dividends and me selling covered calls against Intel shares, it earns me about 6.3% per year. Okay.
Okay.
Yeah, and like the likelihood of them dropping further, I think it's much lower than Tesla is dropping.
That's fair.
Yeah.
All right.
Yeah, I want to look at the chart real quick. It's just highlight how far we are from supporting kind of levels.
I mean, supporting levels. So I think Michael Burry stopped his short like here or something.
Yeah.
Good call, man. I didn't short them. I was too afraid. Obviously, they're all the way up at the 1220 range. The weekly chart's pretty wild. So this is a weekly chart. Okay, so COVID's here. just to be clear, this is wild. So yeah, I think that your number is actually low. I think that it could be like $5,000 a share, because I think that he's going to open up an automotive plant on Mars. And there's a whole other pretty much species that we're going to be selling Teslas to. It's going to be a whole alien conglomerate. Yeah, I think he's going to be the head of it.
Yeah. Is it like Marvin the Martian?
Not ruling it out, man.
Yeah, I mean, maybe.
It's Elon Musk.
Yeah. You never know. He might start mining Mars for lithium to produce cheaper batteries. Could happen.
Yeah. Well, yeah. So now you're at a rock and a hard place. Is Tesla? Do you go now or no? I don't know.
Me? No.
I'm out. I can't do it. But I can't say the share's not going to go to 2,000.
It could. It definitely could on a technical basis. I'm just staying. This is an avoid for me because like it just there's too much uncertainty. The numbers are too ridiculous. This is another funny one. Look at the price to free cash flow. So like free cash flow. A lot of boring companies maybe like a ratio of 20. Maybe a growing company like a ratio of 40. That's what they were here. Kind of back, right when they first turned profitable back in like 20, right around 2020 here. They're price to free cash flow ratio of about mid 40s. Then all of a sudden it just went parabolic.
They're at a plus 400 there, huh?
Yeah.
Yeah.
Pretty insane. All right. Well, let us know what you guys think. Like, what's your price target for Tesla in 2026?
And does that price target include Androids?
Yeah.
It's important.
Mm-hmm.
All right. Have a good one, guys.
All right. See you guys in the next one.